In our last session, I'm really excited to introduce Cara from my team, who I'm very proud to be able to say is very passionate about this topic. And Cara's going to be leading the last fireside chat along with her guests. So if you guys want to come up, thank you very much.
All right. Hi, everyone. Thank you for bearing with me for being the last session for today, kind of holding you up from lunch. But we have a really great topic today. And as we were considering the agenda for this conference, we were really trying to think about the perspectives that you were going to be hearing from. So we heard from your peers, we heard from founders within the startup side. And so what I'm excited to dive into today is more from an external side. So someone who's not necessarily in and out in the VC world, but someone who reports on that. So I'm really excited to introduce Kristen Tallman, who is a financial reporter at Morning Brew. And she reports on not only what's happening in the VC world, but what's happening in relation to ESG and some larger global economic trends that we're seeing. So, and before that, she was with Financial Times, also reporting. So welcome, Kristen. Thank you for joining us today. I really appreciate it.
Thank you so much for having me. Yeah, now you guys get to hear from the journalist perspective. So then you get to hear the juicy stories. I'm just kidding. I don't have too many juicy things. But yeah, as you were saying, I reported on ESG exclusively at the FT until May of this year, and then went a little bit broader as sort of the ESG movement is just going broader.
Yes. And, a great way to start this off is, can you just explain ESG for us in the room and like why this is relevant for VCs today?
Yeah. So it feels like every single time I get on the phone with someone, I always say, hi, my name's Kristen Tallman. I cover ESG. Full stop. ESG means a million things to a million different people. That makes it very complex, right? You might get on the phone with someone and be like, let's talk about ESG, and they'd want to talk about governance and you want to talk about environmental. So basically it's broken down by three different subsets: environmental, social, governance. Think about it like this. I want you to think of a timeline. Governance has always been there. Boardrooms, executive pay. It's always been there. So that's traditional. You want to kind of think of that as always been there, and now it's lumped in. Environmental kind of came next, and as environmental concerns popped up, social was pretty much just disregarded until COVID-19 hit. And then people were thinking about the social impact, people not having jobs, DE&I, as that sort of came more in the last couple of years. So environmental concerns, a lot of times the buzzwords in that space will be carbon offsets and what's your environmental impact, and do you have a sustainable finance framework? Social will be, what does your DE&I plan look like? More and more so executive pay and pay scales have kind of come in that as you've seen unionization rise, and that kind of fits in the social bucket. And then the G, as I said, being more historical, right? What does your governance structure look like? Is it you as the CEO and then your brother and your uncle and your sister and your cousin, all, what's the structure that's around you?
Awesome. Hopefully that was a great way to explain it there, to think about these three different sections. And so as a lot of people in the room are with VC firms and some who are virtually watching as well, why is it relevant for a VC to be considering this in their process when looking at investments?
Right. So VC, I think the general consensus is that VC has lagged in this department. It's been more led by first institutional investors, big institutional investors, the BlackRocks of the world, the Blackstones, et cetera, so forth. And then companies sort of were like, oh gosh, well, we got to listen to these, big institutional investors. They do happen to control lots of what we do. And then they started implementing things and saying things and releasing sustainability reports, et cetera, and so forth. And then now it's kind of come down to, I would say, the smaller, the venture side of things, which most people think of when you're outside of that, right? Of like, oh, these startups in this early stage and blah, blah, blah. So I think when you want to think about why should I even consider ESG, you want to, for the VC side of things, and I think ESG in this moment, as it's become more devices of why would we consider this? ESG is a risk tool. It is another thing in your toolbox to think of, when I am having a conversation, when I'm at the table, when I'm thinking about making a deal, et cetera, talking to, what could be the next big company in this space, what are these factors that down the line, and even more and more so in the early stages, they're going to be asked about? What does your executive team look like? Who are you hiring from where? Are they all from San Francisco? That, those kind of questions, that all fits into the bucket. So I think VC also, and something that I've been hearing a little bit more, as it's also an opportunity to sort of be to serve as guidance. There's so much coming down the tracks with ESG, despite all of the recent backlash. This is the way the world is moving. The SEC came out with a proposal that they're going to have companies start disclosing this. So now, if you have, publicly listed companies, but if you're going to have this down the line, it's going to be really hard to fix when you have 250 people, even when you have 50 people. It's going to be a lot more manageable when it's a team of 5 and you're also this investor and you want to say, look, these are the questions that you're going to get. This is also what your customers are going to ask about. This is what your employees are going to ask about. Employees is kind of the big piece that people kept thinking of. ESG is important because investors care, because VC should care, because institutions and all of that. But also now employees more so. And, and if you have movement or discontent among your employee base, right, that's not going to help the future of your company, whether it's 5 people, 250, 10,000. And you've seen that in the news recently.
Yes, absolutely. It's all great to talk about this, but I'm curious, as someone who's in the, in the arena and reporting on all of this, do you have an example of maybe a venture firm that has done something like that really well and really thought about investing in ESG in the way that they move about their deals?
Yeah, I mean, in terms of, I think what I can't point to a specific US space that I would say this venture firm has done has really gone above the ranks in terms of the US market. I think you'll actually see that though in the next sort of 6 months. I think that's when you'll start to see outliers. There's different ones, outliers in terms of the ESG space, and that becoming more and more of a focus than just sort of a tab on their website. But some big examples, KfW in Germany, a lot more of the European venture capital firms have made that more of a focus because they've started to create frameworks. What I will say is there's 3 different association-like bodies, and the VCs that are part of that in the US seem to be making the most movement. So there's Venture ESG, which some of you might be familiar with. They've kind of grown. UNPRI, so it's a subset of the UN, but it's UNPRI. They're global, but they've also done a lot of really good research on the VC ESG space in the US. And then, so I said Venture ESG, UNPRI, and then it's ESG VC. So they're all, sound like variations of each other. But they're actually, the thing that's interesting about those 3 is what the members that have become members of those 3 bases and use their research seem to really be pushing quite quickly along. And Venture ESG, I think they're in the Bay Area, but they're mostly just US focused. They also recently hired on Desiree Fixler, who was the DWS whistleblower, to be on their board. And so they're moving rather quickly. The last I talked to them, which was about 2 weeks ago, they're doing a lot more things behind the scenes. They're not so ready to talk publicly yet. So like I said, in the next 6 to 9 months, I would say you will really see the VCs who will be kind of making the most movement in the ESG space in the US.
So we've seen ESG become more popular within the VC realm, absolutely, in terms of consideration. So why have we lagged in the past? What type of examples have you seen of someone who's really made a comeback or has really turned a new leaf in starting to focus on those types of investments?
So in terms of a startup or sort of a VC?
Either.
Okay. I mean, one interesting one, I think that what I would say is just trying to reframe it too as not so much of and the companies will talk about it differently. Startups will talk about it differently. Like, for example, Appeal, I don't know if you guys are familiar with them. They do food packaging that basically makes food last longer. It's APEEL. You know, a lot of it more now is being reframed as a business case instead of sort of like, oh, this is our ESG strategy. And I think that's where you see it be really successful. So when you have the resources to back it up, instead of it just being somewhere in a sustainability report and sort of like, this is the framework that we run. So Appeal, for example, which is, I mean, a pretty big startup by probably from your guys, I mean, I don't know the exact levels and the terminology, forgive me there, but they have, now started to put in place a sustainable finance framework where every single investment that they make, and granted this is a startup, so not, not from the VC lens, but every investment that they make also is run through that projection. And I was like, how are you doing this? How does this work, et cetera, and so forth. And he was like, it's surprising most of the time, actually the sustainable option, which is broad rates, so I'm going to caveat with that, will be also the best option in the long term when they're sort of forecasting numbers. If that was a reasonable example that you were looking for.
Yes, and it actually brings up another point of like, what ESG risk and questions do you think VCs need to be asking as they're going through this process for, you just mentioned this new startup.
Yeah, so it's interesting. Just about a week ago, the WEF, World Economic Forum, released a report, sort of venture and ESG, which I think you guys it would really be probably useful to take a read if you're looking for something, after this and so forth. A lot of the questions that should be top of mind, I think, and you have to also think, in this environment. So I'll answer to the current macro environment. So as deal making has maybe slowed a little bit, right, as risk has grown, and you still are holding on. There's going to be dry powder that you're holding on to that you then need to as maybe as wider economic factors improve, you're going to want to do something with it, right? And even still in this moment. So what you want to be asking and what you want to be thinking about is going to be different on different paths, right? But I mean, also, it's really important from those first early stage to be, how are you thinking about building out your team? How are you going to ensure that, if this is where you want to grow into, you have the skill set that will help you do that? What are you thinking in terms of, your governance structure? What are you thinking in terms of the carbon impact? I mean, even from, there's more and more so of a focus, even on technology companies that used to sort of be like, okay, let's just answer the social and the governance questions and we'll get that down. And like, no one really cares about our environmental thing because people don't really understand the environmental impact of data centers, et cetera, and so forth. More and more so with the understanding of ESG growing among, consumers, among wider parties, those questions are coming up. And so those you should be asking before someone else asks, right? And as I had sort of alluded to earlier, is there's this new concept that venture capital could also have sustainability as a service, almost as like a consulting service, to, and in addition to all the other things that VC consults with their startups, as being a guidance now that there's more regulation coming down the track and more questions.
Have you seen, as you're in the field and seeing these stories and asking the questions of a lot of this industry, have you seen examples of either something that has gone well for a firm that focuses with ESG investing or not so well, like a cautionary tale almost?
Yeah, I mean, it's a really good question, right? And I think in this moment, you've seen so many tales of, oh shit, that did not go well, as there's been so much in the news of, so much anti-ESG backlash. I think and I won't give one specific example, just not fully call out specifically someone or a certain company, but where you get in the crossroads and where it seems that people get snarled up in, the questions and the controversy is when you've said something and then then the actions become different. And I think there was a lot of pressure in 2019, 2020 to make these claims. And then now you have people saying, oh, what happened to that, right? And that's not to say, there was this pressure to do maybe everything all at once. You don't need to you don't need to save the world tomorrow. No one's really expecting you to do that. And I think that's some of the misconception with the ESG movement of like somehow you're going from, I don't know, being like a small startup to then needing to like save everyone. But honing in on what is important, whether that be the E, S, and G, you don't need to do, as I said, everything all at once, but sticking to that and then not sort of faltering when those decisions come down the line. Because at this point, if you've put out the sustainability report, if you have it somewhere, the CEO signed off on it, I mean, it's the internet, right? Like anyone can be like, oh, here this was, and you said this and you said that. So, and as transparency grows, that becomes clearer and clearer and clearer. So my best sort of example would be, just kind of focus on what is critical. And there's a business case. And that's also another sort of debate of, does there have to be a business case for everything, to just operate responsibly? But there is, in each business, each sector, there is smart ways to approach things. It doesn't have to be across all boards, right? You can focus on one area that would make sense for your business, for the values. There's this saying in the community of sort of impact and value investors where they say, everything has an impact. Every investment has an impact. So to call it impact investing is actually nonsense, because whether you're in, wherever you're investing, it will have an impact. And so to consider that alongside just, this do-goody side of it.
Okay. Can't we just plant trees? Like, do we really have to focus on, the business case for investing with ESG and making sure things are sustainable? Or can we just find a business? I'm sure that's a question in a lot of people's minds is, you hear all of these opportunities where people are funding businesses or their company for, planting a tree per employee. So, can't we just plant trees?
Yeah, it's really funny. That sort of was always the running joke. And I feel like we were asked this all the time, especially I don't know if any of you remember, like last November, there was this Instagram like filter or story being shared that it was like, we'll plant a tree if you share a photo of your pet. And it was shared like 1 million times. And it was this super like small, I don't know, it was association or something. And they were like, oh, just kidding, we can't do this. And there was also this credit card, which I'm blanking on the name of, but it had advertisements all over around sort of this time last year, all over New York City. And it was like, we'll plant a tree if you, for whatever certain amount that you have with us in terms of money. And we had looked into it, the FTSG team, and we were like, this just isn't really adding up. Sort of the concept that you can just add trees, I think, goes hand in hand with the carbon offset discussion of, okay, we'll just do this practice, but then we'll just buy offsets and it will just offset all the bad. And I mean, as early as 2 hours ago, you're seeing companies pull out of that plan. So EasyJet, one of the biggest budget airliners in Europe, just said they're backing out of their carbon offset strategy and looking at other methods. So I think that this concept that, okay, we'll continue down this path, but then we'll just, go to Amazonia and plant like 200,000 trees is way more unfeasible than possible, and the research also doesn't back it.
Completely understand that. I know it can be a little, you start throwing out greenwashing with those types of activities, and you want to be able to show that effort of, yes, this is culturally ingrained in what we believe in, and therefore we're investing in the right things in order to do that.
Just a quick point on that greenwashing, because I hadn't said that word, or we hadn't gotten to there. And that's another point where I want to double down on where I said, you don't have to do everything all at once or answer all the questions all at once. And actually, if you do that, or you try and do that, the likelihood of being accused of greenwashing goes way up, right? And that's kind of what the big fear in executives' mind right now is. And that's where there was a really good piece actually by my former boss, Jillian Tett in the FT last week that was saying, everyone seems to want to stay below the parapet and not make these bold environmental statements right now, but no one's saying that they don't. Not no one, but the vast majority of executives are also not saying, okay, well, now we're suddenly anti-ESG. It's here to stay. It's just becoming more and more clear on, or companies across all stages are having to become more and more clear on what exactly in ESG is meaningful to them, and then what they're doing about it, because there's sort of nothing worse than being called out for greenwashing, it seems.
I think you brought it up earlier, though. Like, there's a lot more stakeholder pressure coming from all areas that you're facing. As you mentioned, you have employees who are wondering what you're doing internally in order to be, an optimal place to work. You have your board members wondering what are you doing in order to match what's happening, in the news, that a lot of these businesses are starting to focus on ESG specific or sustainable investments, and you kind of feel that pressure. But it's like, don't jump the gun. It's almost like if you don't have anything nice to say, don't say it at all, is what people seem to be, finding that comfort zone. Have you seen an example of like, okay, this is just like ticking the boxes instead of really considering their options for investments? Have you seen that happening when you're reporting?
Yeah, I definitely think that was very much so what was top of mind, maybe until the last 6 months. And I think that was the initial approach from reporting that I did. And I did a lot more on a couple pretty big articles on VC and ESG earlier this year, and then was following it up late, in the latter half. And it seemed to be that it was more of a box ticking exercise, or because there wasn't a really good handle on how the VC space was going to approach ESG and sort of retrofit it to fit smaller companies, smaller investments, et cetera, and so forth. So at that, there it was kind of becoming a box ticking of, okay, I heard a story, this was in March of this year, that two pretty big VC firms had said, like, yeah, we kind of just came out with a questionnaire and then have been sending it around, but we've realized that actually really doesn't do anything for us and has just piled on more work for the receiving party. And so there has been sort of this turn from potentially box ticking to how is there going to be a framework that is, there's the SASBs, the GRIs of the world, which are just big frameworks that, for example, Larry Fink is SASB's biggest fan, and thinks that every company should use that. And there's these different frameworks, and there's lots of different discussion on what framework is best, right? But those are fit for big companies. And so these big VC firms that had sent out sort of a survey, that was a sort of a box ticking, okay, well, we've asked about this. But I think that doesn't get at the core of what ESG is and why it has been so appealing to people who are fans of ESG, is that it's a risk tool, right? So if you can use it smartly, well then, why have just sort of this survey that you're going to send out to your portfolio companies, and instead of have it, build it more, have it more holistic to the decision-making process. And that's where you've seen Venture ESG, as I had mentioned, had kind of come together with their group and their group of members, and had combined different aspects from UNPRI's questions, from GRI, from SASB, I think even from FASB. So they had kind of combined many different frameworks, and I think that's still being refined.
Yeah, and I mean, we saw back in, what was it, 2020, where BlackRock made the announcement that they're going to prioritize green investment, portfolios over others. So how, do you see that as a marker up and coming, or, that was back in 2020, but do you see that as a marker for not only larger financial institutions, but for VCs or investment banks who are dealing with this dry powder that they now have? Do you see that as being a way to look at framework for themselves?
Yeah, I mean, I think that as you become more stringent in your investments, right? I think there's, and I don't work in VC, obviously I'm a journalist, but I can imagine that you're asking more questions and you're a little bit more risk averse, right? So this, I would, pretty safely say that it will be more top of mind. I think that you'll just see it a little bit more behind closed doors, maybe after November, until November.
We'll see how this one goes. But there is a lot of dry powder hanging out. And as someone who's kind of seeing the trends as you're reporting, what do you kind of foresee for maybe the next quarter or the next 6 months? I'm curious kind of your predictions here of what you're kind of hearing murmuring among everyone.
Yeah, you're funny. You're asking me exactly what I ask everyone else all day. Yeah, I mean, in terms of, maybe let's refine that in terms of sort of what direction, where, for the next 6 months, there's a lot. I think that renewable energy is getting all the attention. That's all anyone wants to talk about. That's all anyone wanted to talk about at Climate Week, is sort of the deal making in the shadows around lithium and hydrogen and what the movement is for that. And a big Australian energy miner had made a huge announcement last week that they're going to invest, and of course I'm blanking on the exact number off the top of my head, but it's like 30 billion over the course of time, and I think maybe a certain amount per year. And you really wouldn't have expected that from that Australian energy maker. And so I think that there's lots of focus on that space, and rightfully so, right? I mean, it's in the headlines every day. Everyone's thinking about energy and the energy crisis. But I went to, but I wouldn't say it's just coming from that. I went to South by Southwest earlier this year. And I was surprised by, BP has their own venture arm. So does, all the big oil majors have their own venture arm, and they had massive Shell had a whole house booked out at South by Southwest, and they were all focusing on this. And I wrote about it at the time because it was the irony. The week before, there had been some massive energy conference in Houston, and they were, it was drill baby drill, and the next week it was ESG and road to net zero, and offset your carbon of how much carbon you use to get here. But there really is a lot of focus in the environmental space and energy, and I don't think it's totally fake. I think that there's needs in this current moment, but there also is so much long-term thinking, and that being so wrapped in with ESG and sort of this long-term risk. So I don't know if that fully answered. That was maybe one sector specific, which shows what's top of mind for me and everyone else, but maybe that gave some insight.
No, I appreciate it. And I know that we're getting low on time. So ultimately, I just wanted to say thank you, everyone who's here and watching virtually. And Kristen, thank you so much for giving your input on, ESG and investments and kind of what VC should be thinking about around the framework. And so I appreciate the time. Thank you.
Thanks.
Thank you, guys. Thank you so much. All right. Thank you so much, Cara and Kristen. Really appreciate it. Okay, everyone, this is the end of our scheduled time here. I want to thank each and every one of you for attending. I want to thank everyone who joined us online. And I also want to thank all of my team who put this together. There's a whole virtual team. There's a whole virtual team who are doing our social media engagement, who are doing the streaming, who are doing all sorts of things. And the people that put together all of the content that you've seen over weeks and weeks and weeks, our designer Jim just did an incredible job. And Olivia, who is not in the room, who's outside working still, who put this together in the face of a number of really dumb questions for me over a number of months. Just an incredible job. Venue was great. Thank you for your engagement. Really appreciate you doing this. The last thing I would say is that we do have a grab and go lunch outside for you to grab and go or stay. Enjoy the rest of the day in Carmel Valley. With that, again, thank you so much for being part of Campfire. We'll see you next year. Thanks.